Morning. Welcome to the Rick Helps Real Estate Show. We try to make sense of this crazy Arizona market in this heat of summer, good old summertime in Phoenix, Arizona, and the kids are home from school. And if your kids are home and they're not behaving, get them out of bed and make them watch this show. And they will beg you, please don't make me do that again. I'll do anything. And it's just a public service that I offer here on the Rick Helps Real Estate Show. And the other thing I want to show you is what's going on in the market. This could be an interesting week, especially when it comes to interest rates. We're seeing right now there's a move down slightly in rates. Rates are hovering around 7.15. This is an average. It's a survey. You can find higher rates if you want, and there's some lower rates out there. But yes, can you get me a higher rate? I would love that, please. But the CPI is coming out on Wednesday. This is when lenders are chewing their nails off because do I lock you? Do I not lock? If the CPI comes in hotter than expected, then you can expect rates to go up. If it comes in lower, you can expect rates to drop. How much? All depends. The consensus out there is that inflation is going to continue to drop ever so slightly, somewhere around the 3.3 range. And so if it comes in a little hotter than that from last month, then all bets are off. So, it's just what the market watches. And but we're still going to be hanging in the sevens. Now, if inflation comes in considerably lower, don't be surprised if you end up below 7%. Right now, the markets are kind of betting that things are going to be about the same. That's why you're seeing that needle not move too much. But what's going on in our market here? I'm saying it's hot in Arizona, but the market is not. It is cooling down. Is it crashing? No, I'm sorry. It hasn't crashed yet. Hang in there. Active listings right here. We're at 17,960. And you can see if we take that, roll that back to pre-pandemic levels, you can see that's kind of where we're at, like the 2019 levels here. And of course, you can see what happened down here in 2021 and 2020. There was just no homes available to purchase. Pending listings, though, are dropping. And this is typical for summer. You can see a drop just about every summer. It happens, especially in the high-end markets. They don't tend to stick around to buy homes and walk around in this sweltering heat. So that's dropping. And if you look at my 7-day moving average, what I'm seeing here is, we had that dip down for Memorial Day and we recovered. We always do. We come up. So new listings have dropped a little bit and new contracts have come up a little bit. Now, the key to this and the reason that I track this is it doesn't matter if the market's busy or slow. It's the gap between these two measurements. Right now, the gap is we're selling about 74% of new listings that are coming on the market. So that is, while it's not a healthy market, it tells you that there is kind of a floor right now at 74%. Don't expect prices to come down swiftly. You get down in the 60s and you'll start seeing price declines. But for now, even though both numbers are low, they're still close enough together to where we're seeing prices go up ever so slightly. Now, the Cromford report has a chart showing the Cromford market index and where it crosses, but for some reason, they haven't updated it since April 1st. So not going to bother you with. I'm going to show you this, though, because this is telling. This is our Cromford market index in total. 110 is considered a balanced market. That's right here. So in total, we are below a balanced market. Now, that's not everywhere. Chandler, Paradise Valley, Gilbert, they're still in a seller's market. Areas like Buckeye, Maricopa, Queen Creek, they're in a buyer's market. The rest of them you would consider balanced. And we haven't seen balanced in a long time. So what does balanced mean? Well, it means you don't have to make a decision in the driveway. Hurry up. Do we want this house? I'll write the contract now. I got my iPad. Let's go. You got time to think about it. And that's a good thing. And if you look in detail in the Cromford Market Index this morning, you can see that the demand has only turned slightly down here. Get my handy dandy magnifying glass here and show you. It's a little bit of a downturn. And if you take a look at the supply, you can see its supply has gone up. Now, the supply has gone up simply because sales have been down. If you can see that my new listings coming on, it really hasn't jumped up that much. It's not like the market's being flooded. It's just kind of 100 homes a week, kind of an increase. Nothing major. We have a question here that says, what are the C plus to B minus area for investors to invest in for cash flow? Glendale or Mesa? Boy, that's a neighborhood by neighborhood thing. I would say that Glendale's probably your best bet. They have a lower CPI than Mesa. So, but there are parts of Mesa where you could probably do very well, because the return right now for investors is starting to be pretty favorable. I just read that about a few minutes ago. And here's why. Look at the listing success rate by month. In May, it was 78%. And right now, we're 67%. So that means I listed my house. Yay, I sold it. Well, the success rate is dropping. We hit a low in December of 2022 of 63%. Although all of these are well below what's been the average since 2010. So listing success rate, a little more challenging for you out there if you're looking to sell your home. Average list price per square foot. Now, this is going to be encouraging for those of you that are waiting for prices to go down, but it's not a huge downward spike. Some of it is seasonal. You can see they're kind of blending together right here, but we're right here at $373. Now, the beginning of the year, we're $3.68 per square foot. So we're higher than the beginning of the year. We did get up to and these are the asking prices, $391. So this means this is people listing their house saying, I want this much. And they were finding out that they couldn't get it. And that's when you start seeing the number of price reductions per week. So price reductions does not mean that the average sales price is going down. We're still averaging about a 3% increase per month. But here we are at $22.85, a price cut in June versus May of $21.71. So more price cuts are out there as the market slows. And again, it's I'm not trying not to sugarcoat this. It is slow. You're seeing asking prices start to come down, but they were a lot higher just a few months ago. They weren't getting it. They were asking it, and you're seeing them come back and hit a little bit of reality here. But the contributions are 45%, 46% seller contributions. You're competing with new builds, especially in the outlying areas like Buckeye, Surprise, Queen Creek, Maricopa. 45% of you are giving up seller concessions and averaging $9,395. So that's a pretty hefty amount. So buyers are asking for that when they write you a contract. This means nothing here. There was normally something pulled up there and it's not there. But it's interesting. I'll tell you a quick story. I got a friend out in El Paso selling his house under contract, supposed to close last week. I get a text. I signed my documents. He was out of town. And he says, and the buyers say that they can't close because they don't have the $100,000 that they said they did. Just ridiculous. Well, evidently, at the last minute, these buyers were trying to renegotiate terms. And he just said, no, not going to do. I'll put the house up for sale. They eventually came to their senses and the house closed. But, if you're going to renegotiate terms, you do that during the inspection period. You don't wait till the day you're supposed to sign papers. So I was up here really feeling for my buddy going, man, that's rough. Here's a little bit going back again, talking about the CPI. Every tenth matters to markets, whether or not the CPI is up 3.1, 3.2, and also policymakers of the Federal Reserve who convene at another place in Washington and announce their decision. One thing is certain, the reaction will be choppy. Some market participants will want to react to the data, while others would want to wait for the Fed to respond. In case of a deviation of 0.2 percentage points or more from expectations, whether up or down, it says the reaction will be strong, but a miss or a beat by only 0.1 percentage actually will be a big snoozer. So if you see the news and they're up 0.2% higher than projected, then the market's going to move either way. And that's what lenders are going to be looking at for Wednesday. They're going to be following the chart, seeing what the market says. Do I lock you in today? Because CPI is going to come in hotter than we expect. So I'm glad I'm not sitting at that desk. Now I do have, there's a market report that comes out that's produced by Tom Ruff with our local Arizona MLS. I'm waiting for the new version. I checked again this morning. They still only have April. I point that out because on my website here, you can download the recent report there. If you click on that tab, go to rickhelps.com, and you can get a very detailed market report that comes from Tom Ruff, who's our analyst here, and he shows you all the statistics for the month. Now, this is April. I'm waiting for May. He gives you some commentary. He also gives you some commentary from the Cromford report. But alas, that's not done yet. So maybe tomorrow. I'm waiting to see what happens. So I'll have that updated. Now, when you click on that link, you don't end up on an email list. I don't spam you. You'll be in good shape. So another thing I wanted to show you, unrelated to real estate, but it kind of is. And I went up to Flagstaff for a few days this week to escape the oven down here, and went to a new place called Village Camp Outdoor Resort. And this is their main clubhouse and bistro. This is their pool, and it's an RV park, but it also has these tiny homes. And what's interesting about these is you can rent these. That's a premium RV lot. There's the bistro. You can rent these, or you can actually purchase one of them. And they're going to be putting in a big water slide there. So there's the interior of them. They start at $250,000. Now, Flagstaff has a median price for their homes of like $689,000. These are $250,000. But here's the kicker, which kind of makes it very kind of unattractive in my mind, is you're buying that unit. There's some restrictions as to how many times you can rent it. They'll manage the rental for you if you wanted to use it as like an Airbnb. But there's a land lease fee of $650 a month. That's kind of rough. So you don't own the land. You own that tiny home, but you don't own the land. Now, having said that, there's a lot of activity up there this week of people, riding around the golf carts, looking at that with the salespeople. But I will say that it's probably one of the nicest RV parks that I've ever stayed at. So I recommend it highly if you're looking for something up there, except for the damn trains. There's a train track across I-40 on the other side. And man, Saturday night, it's like every train in the world, and they got to blow their horns. It's just getting sleep was a challenge. So while I recommend the park, if you don't like trains, I don't recommend that park. And I say that saying that pretty much any RV spot up in Flagstaff is next to a train track. So, but it was a lot of fun. Stephanie here says, like the land lease fees that proliferate in Palm Springs and part of Southern California, it's ridiculous. Yeah, Palm Springs, well, it's the same thing in East Mesa. You get these park models, and they're raising the fees like crazy. Some of them are, $650 a month. Some of them are almost $1,000, depending on how big the clubhouse is and what kind of entertainment and amenities you have. And it's an opportunity for people to go in and buy something relatively inexpensive and just, pay the lease fee. So it doesn't help you with your taxes, that's for sure, but it's just another option out there. And then the danger is these parks get sold. So they get owned by Treehouse. They get sold to a place called Roundtree. They come in and they jack the rates up. It's ticking a lot of people off in that part of the woods, especially out in East Mesa where snowbirds come down from Canada. They usually own a park model in one of these parks, and the fees are going up. But what isn't going up? Groceries. They're going up. The difference between private label and branded products is absolutely staggering right now. When you go into a grocery store, take a look at the brand and then look at the private label. It's you won't buy the brand. It's expensive. Anyway, I hope everybody has a great day and a good beginning of the week. Try to stay cool out there if you can. Be careful. It's going to be back up to 110 this week. So no jogging at noon. Okay. Take care. Good to see everybody.